Hey everyone, welcome back to Go Predict. Real quick, I got an update here for you. Michael Burry, Dr. Michael Burry from The Big Short, the movie, he is extremely short the market right now. He has 2 million put options each on the Spiders S&P 500 and the Investco QQQs. That accounts for approximately 94% of his current holdings. He is heavily short. This is about $1.6 billion worth, and they're put options, so they're extremely leveraged. So he has an inkling here, and if he's short, I think we all need to pay attention. If you don't know who he is, I'm going to play a quick snippet here from the trailer, so maybe this will refresh your memory.
Michael, how are you?
I found something really interesting.
The whole housing market is propped up on these bad loans. They will fail. The housing market is rock solid. It's a time bomb.
Yeah, so Dr. Burry was one of the few people that saw the housing bubble and was able to profit. I think he made, $4 or $5 billion off of that. He was a little early. The housing market took longer to roll over than he expected, and he got in a little trouble with his investors because there was a drawdown before he finally profited. But he saw it, and he sees something now. I shared this chart the other day. And basically, this is just a ratio of leading economic indicators compared to coincident indicators. And as you can see where we are now at almost minus 10 points, this rarely happens outside of a recession. The gray vertical bars are previous recessions. And accordingly, we're not in a recession right now. But I think he sees something and I see something that tells us we are close. We are close. So I'm trying to warn you, pay attention, and you've been warned. Okay, so what does this mean for the stock market? Well, first things first, nobody knows, including and especially myself, but we have some guesses here. We have some history. I just showed you the prior recessions, and if this was the top of the bear market rally, I think this was the beginning of a prolonged bear market. We had the bull market top here at the very beginning of 2022. Prices came down, but then they rebound sharply. Now, this is the longest and the deepest rebound I've ever seen in a bear market rally, but nevertheless, I think prices are going to head lower. And if with history as a guide, we can see that the prior recessionary bear markets in 1974, we had a 50% drawdown. In 1980, a 22% drawdown, 82, 27%. 1990, that had the smallest drawdown, which was 20%. In 2000, 50%. In 2008, we had a 57% decline in the S&P 500. Now, the average is 37%. But what I want you to notice is here is it's either in the 20 percentile or in the 50 percentile. I'm not sure. I don't see a massive 50% correction because that would the max here at 57% would take the S&P 500 down to 1,982, which is, that would have to be pretty bad. I'm not sure what the trigger event would be to cause something like that, but I don't see that. I see us probably maybe averaging in the high 20s, maybe to 30%, but a 37% would take us down to 2903, and the minimum, provided again this was the top, which nobody knows, but it's starting to look possible, especially the way that Dr. Burry's positioned. That would take us down to 3686, not quite to the October lows, but down enough to make people a little scared. On the MACD, we have a negative divergence here into this last top. Prices made a higher high, but the MACD made a lower high. So at a minimum, we have loss of momentum. But look, we got a long ways to go to get back below the 200-day moving average. And I think we'll get there. We probably could see some chop here as long rates start to inch higher. But eventually, I think those recessionary forces are going to take hold, and we will continue to drop. And when people get scared, they sell. And I think that's where we're headed. Maybe later this year, but definitely into 2024. So stay nimble, pay attention. I think things are going to get interesting here. And I just want people to be prepared. So that's it.